Do you think investing 10,000 per month can make you a crorepati? Yes, it can definitely achieve you to become a crorepati. So this is how it is. So if you invest consistently in SIPs and mutual funds, you can quickly become a crorepati with just 10,000 rupees per month. Let's see how it works. So, is this something possible? Is this something that is realistic? These are some questions people ask. Now, this is a monthly investment of 10,000. Mutual funds in India generally offer a return between 12 to 15%. So, if you have a time period of 20 years and if you keep investing 10,000 per month, what do you get? You get close to 1 crore rupees. So, let's look at it in SAP calculator. So, let's say you start investing 10,000 per month now and you get somewhere between 12 to 15%. So I'm putting 12.7% returns. So in 10 years, it will become 23 lakhs. So in 15 years, it will become 50 lakhs. So in 20 years, it will immediately become 1 crore. Let's say you increase your allocation. Instead of 20,000, 10,000, let's say you put 20,000. And if you look at it, in 12 years, in 13 years, you get to, in 13 years, you get to 75 lakhs. So in 14 years, what is happening? So in 14 years, you can get to 87 lakhs if you increase your SIP amount. So let's say invest 25,000 per month. So you can get your 1 crore goal very early in 14 years. Let's say you invest 35,000 per month. So let's say you're earning 1 lakh per month and you're investing 35,000 every month in SIP. Instead of going for loans, instead of going for EMIs. So this is what will happen. So in 11.5 years, you will hit. So in just 11.5 years, you'll hit your target of, so you can look at it. So in 12 years, you can hit your target of 1 lakh. So this is awesome. So just start with 10,000 rupees per month. Have a 20-year time frame. 1 crore is. So if you increase your SIP amount every year during your hike, you can get to 1 crore faster than 20 years. So same thing. Let's say, so we came up with a conservative estimate. So let's say you hit the right mutual funds, you invest in some of the best performing small cap, mid cap funds and large cap funds. You may even get 15.5% return. So I'm putting a 15.2% return with 10,000 rupees. Within 18 years, you can get to 1 crore. So let's see how we can invest and what kind of options are available for us. So why 12 to 15% returns are realistic? I'll show you some more data. So this is Nifty performance over a period of 20 years. So in the last 20 years, Nifty has given an average return of 13% every year. So basically, if you've invested in the last 20 years, 13% return, even just in Nifty, 13% return is very much possible. So quality stocks and index funds have consistently delivered 12 to 15% returns. And India growth story continues to remain the same. They will eventually become a $5 trillion economy and then a $10 trillion economy soon. So from here, Nifty getting to 75,000, 80,000, 1 lakh is definitely possible. So all these are very much in line. So you can keep investing in large cap funds, mutual funds, and Nifty with a long term time frame in mind. So it will definitely go up. It will definitely give 12 to 15% returns every year. So compounding is powerful. So once you start investing in mutual funds, after the fifth year, the kind of compounding it shows, the way it grows your money is phenomenal. So you'll see the power of compounding only when you keep investing in a consistent manner without any gap. So now let's see where you can invest. So I'll give you three investment options where you can consider investing 10,000 per month to become a crorepati. So option one, putting all your money in 100% index funds. So this is a passive investing option. So if you do not have any time, let's say you are busy with a lot of office work, personal work, and you do not have time to look at stocks or mutual funds, this is the best option for you to go ahead. So this is best for beginners as well. So if you are a beginner, you can start with an index fund. And if you are risk averse, if you do not want to take a lot of risk, again, this is the best option. So invest in a Nifty 50 index fund or a Sensex fund. As I said, it has been consistently giving 12 to 15% yearly returns. So don't time the market. So don't wait for a fall. Don't stop your SIP when market goes down, or when market goes up, don't put bulk amount. So keep investing on a monthly basis, have strict discipline, invest every month, take 10,000 out of your salary every month and automatically make it as an investment through SIP mode. So, so 10,000 per month in a Nifty 50 fund for 20 years would have been 1 crore now. So here are the options for you. So Nifty 50 index fund, UTI Nifty 50 index fund is available. HDFC Nifty 50 index fund is there. In terms of Sensex, SBI has an SBI Sensex fund, ICICI Sensex fund. All these have given 12 to 15% return. And then after Nifty 50, you have Nifty Next 50. So the top 50 companies constitute Nifty 50. After that, the next 50 companies, 51 to 100, they are together called Nifty Next 50 index. So there is Nippon India Nifty Next 50 fund. This has been giving 14 to 16% returns. So there is a higher growth potential when compared to Nifty 50, but it is more volatile and a little more riskier. See, the first two options are low risk options. The third one is a high risk, medium risk option. So this is what you have to do. 10,000 per month, SAP, 10 years, you'll be investing 23 lakhs even without you realizing it. Because you are investing just 10,000 per month. In 15 years, your investment will become 55 lakhs, and in 20 years, see the difference. So in 10 years, it took 10 years to get to 23 lakhs. And then in just 5 years, it became 150%, more than doubled. And then within the next 5 years, it almost doubled. So 1 crore is achievable within 20 years if you just invest 10,000 per month. So the second option that I would recommend is investing 70% of your money in large cap companies, direct stocks, and then 30% in index. So best if you are having some time to pick stocks, and if you are a good investor, if you have some time to go through some of the basics like understanding the company, reading its fundamentals, understanding how much dividend they are paying, what kind of revenues are coming, you can build a stock portfolio. So consider investing 40% of your money in consistent compounders like TCS came up with an IPO in 2004, and it has been a consistent compounding machine. Same is the case with HDFC Bank, same is the case with Asian Paints. All these are large companies with significant market cap, but they have been consistently delivering every year. So this is a very good option when compared to small cap companies. So then you can go for 30% investment in high growth mid cap companies like Page Industries. Page Industries is nothing but jockey. They have jockey showrooms all over India, and they are very successful and a strong brand. So you can look at such companies and invest 30% of your portfolio there. And then another 30% in dividend stocks. So look at dividend stocks that can give you consistent dividends on a regular basis. So you can keep investing 7,000 per month on these companies every month. So the mix of strong stocks can outperform Nifty 50, and it can give you 15 to 18% return. So basically, if you're looking for more than 12 to 15%, you can look at this option where you can invest 70% of your money in stocks, but the same thing. So here in this case, you can hit your 1 crore goal in just 15 years. So you can consider large cap stocks like TCS, HDFC Bank, Asian Paints at 14 to 16%. This is medium risk. So high growth mid caps like Page Industries allocate 30% high risk. Third one is dividend stocks, low to medium risk, but you can get around 12 to 10 to 12%, including dividends. So same is the case. If you put monthly SIP of 10,000 across these companies plus 30% in mutual funds, your investment will become 28 lakhs in 10 years. And then look at the difference in the next 5 years, 70 lakhs. And by the end of 20 years, you'll have 1.5 crores in hand, which is awesome. So the third option for you is 50% stocks plus 50% mutual funds. This is a balanced approach that I would recommend for people who want both safety as well as high growth. So you can invest in SIP on NIFTY 50 and Sensex index plus invest in high growth stocks. So 30% you can go for large and mid cap mutual funds. So basically 30% on large and mid cap stocks and then 20% on direct stocks. So less risk than 100% stocks, but higher returns than just index funds. So it is easy to manage if you are a working professional without too much stress. And if you can allocate some time every month to read about companies. So go for Nifty 50, then large and mid cap funds, and then put. So the allocation is the second one would be large and mid cap stocks. So overall, this is again an approach which will help you to achieve very good returns in 20 years. And the most important thing is this: why people fail to get to 1 crore. So what are the mistakes that you should avoid? So whenever you stop SIP during a market crash, you are missing out on opportunities to purchase them at a lower price point. So when market goes up, you will miss out on all these profits. So you should never stop SIP unless there is a need for you to have some money. So unless there is emergency or any other need, don't stop SIP. This is a golden rule that you should always follow. Never stop your SIP. Investing in the wrong stocks can basically kill your money. Whenever you try to time the market, let's say you are waiting for a correction, let's say you wait for the bottom to pick and invest more in mutual funds or stocks, that is again a problem. So always buy in a, even if you start buying stocks, always buy it in a staggered manner as a monthly SIP. So have some money in hand, keep buying those stocks every month on a specific day. Don't increase your SIP. If you don't increase your SIP over time, then again you may not be able to get fast. So stay invested, keep your money invested, whether the market goes up or not, it doesn't matter. It'll eventually go up in the long run. So time in the market matters rather than timing the market. So if you want to reach your 1 crore early, so increase your SIP every year. Let's say you get a 30% salary hike, then you increase your SIP amount by 30%. If you get a 20% salary hike, increase your SIP amount by 20%. So if you keep doing this, you can achieve your 1 crore goal a lot more earlier. Even in 7 to 10 years, you can achieve that. Keep reinvesting your dividends for compounding to take place. So always stay invested for the long term. Don't keep selling in a year or two unless there is a need. Let's say you want to buy a land and you want to sell your mutual funds. If there is no other option, go ahead with it. Otherwise, keep invested, stay invested for as long as possible. So if you increase your SIP by 10% every year, you'll hit your 1 crore goal by 15 years. Instead of 20 years, you'll be able to achieve it within 15 years. That's awesome. That is the magic of compounding and investing in mutual funds with strict discipline. So these are the three options I have recommended. First one is direct investing in index funds 100%. The second option is investing 70% in stocks and 30% in index. Third one is a balanced approach, 50% stocks, 50% mutual funds. You can choose the option that is good for you. You can consult a financial advisor or talk to people who are invested, and you can also leave your comments in the comment section. You can subscribe for more videos like this. If you have any questions about this allocation or the kind of funds you want to buy, you can post a comment. So tell me which option is preferred by you. You can post that in the comment section as well. So what do you have to do now after watching this video? If you have come this far, you have done awesome. So first, pick an investment plan. So I have shared three options. Pick up one option that you want to choose, and then start your SAP immediately. Don't wait for the perfect time. So if you are a salaried professional, if you have enough income every month, and if you have expenses besides expenses or whatever money you can save, start investing in mutual funds through SIP. Start it probably the once the March salary comes in, so you can start investing. So ignore the short-term market volatility. Focus only on long-term. Have 5, 10, 15 years time frame in mind when you start your SIP. As your income grows, your expenses will also increase. You will also increase your expenses and have more purchases, but that is okay. Still have an increase in your investment. So tell me, what is your strategy in the comments below? Is it stocks? Is it stock plus index funds? Or is it only mutual funds? So if you found this video valuable, hit the like button, subscribe for more content on investing. Let's build wealth together. Happy investing. Have a great day.